Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Asian markets continue to trade in a sea of green, powered by most of the AI-led names.
Oman will behave just like everybody else, so we'll have to blow them up.
If a deal is not made, options of striking Iran still exist. It's going to be a higher start. I think about 0.27% higher.
Within the energy security, if you drill down, there are 6 different themes.
So basically, monsoon forecasts have been downgraded.
So organically, I think we should grow by about 4 to 5%.
Actually, personally, I'm a little bit more confident than many other people.
My bookings for X to date is 2 to 2.5x.
But so far as we speak for the week, we're up about 0.7% and the mid-cap index is up 1.8%.
Domestic competition has been tough. There's nothing different this quarter or going forward.
Last day of the trading week, the markets have taken turn for the worst. We are down 130 points as we speak.
Well, that is the day so far, and the markets, of course, off the day's high. And this is, of course, the last day of the week as well, going into one more weekend with, this or that, not very clear, peace or war, we don't know. But as we are starting this program, there are some flashes which we will address in just a bit. This is Sergio Gore, US ambassador to India, saying that, well, an interim deal is on the table. So I think that is a little bit of positivity coming through into the system. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi. Afternoon.
Hi, and the fall that we've seen today, we've erased out all the weekly gains. So the Nifty in the morning had almost got to the 24,000 mark, and now we're a good 200 point plus away from that level. 136 points down on the Nifty. The sensex is lower by 350 points. Mid-caps is selling off. Numbers are coming in and pretty okay. So Asian Paints numbers positively surprised, and that stock has moved up in the green.
Well, that's right, Reema. And a few more stocks actually from the broader markets. Rain Industries, the stock has made a fresh 52-week high. Earlier this year, I think in the first week of January, we had explained like the aluminium cycle could be strong, and a potential play on it is the input cost, which is CPC as well as CTP. That stock is now up closer on 7%. And in the last 1 month, it's up more than 40%. So you just pull up a 1 month chart, you'll see that stock is doing very, very well. Wokart, that's another stock that's up closer on 17%. So massive move out there. And though the markets are down, it still appears that the trend is up. The 50 DMA gets defended. That 23,650 is extremely important going by the options data. So I don't think any big concern, even though we're down closer under 130 points. And crude oil prices are well behaved. That's the biggest trigger out there.
Yeah. No, absolutely. And that you just see that last flash, which I was saying, this is, again, the other thing, right, which is the US trade deal. If something takes the front seat, something moves to the background, then, and what's moved to the background is, of course, US-India. What's moved to the front seat is oil prices, Iran, etc. But this is, whenever it happens, it's going to be pretty important, right? So Sergio Gore saying that last week, India sent a team to finalize last 1% of the deal. So that is an interesting way to put it. Confident that India-US trade deal will be signed in the weeks to come, and interim trade deal is on the table for us to finalize. So these are important comments coming through with regards to India-US at this point in time. And let's see if the market starts to respond, because this one also has been, out there for a while, right? Back and forth, proposals on both sides, and of course some contentious issues, etc. So we'll see what gets done. But in a few weeks, in the weeks to come, is what the US ambassador to India is saying. Lots of individual movers. By the way, I think the market is moved up a little bit from the lows of the day. We were at, I'll tell you, we were at about 23,730. Yeah. And we've moved up about 70 points in the last 7-8 minutes or so. Yeah. On the index, it's a turn, and we've got about a 100-odd point cut now. It was looking like it'll be a 200-point cut, one point. So there is a bit of a bounce which is appearing as well.
One more set. TCS is.
Sorry, I'll just play out that soundbite. We have the soundbite, Sergio Gore. So let's just use it.
Our current interim trade agreement is on the table for us to finalize, and that will unlock prosperity for both of our countries. Just last week, India had sent a team to Washington, D.C. to finalize the last 1% of that trade deal. Next week, we will welcome a U.S. delegation here to continue those talks. We fully expect that the trade deal will be signed over the next few weeks and months.
Okay, just a clarification coming through on TCS on the report that Money Control had put out earlier. The TCS has lost a part of the RBC Canada mandate. They've lost the deal to Accenture, and 150 members would be rebadged. So there was, when the news came out, TCS had slipped from the high point of the day, but the company is clarifying to the exchanges, and I'm saying we'd like to bring to your attention the article is false, so denying it. And they go on to say that we have a long-standing partnership with Royal Bank of Canada, and we cherish this partnership. So refuting the report about losing this deal to Accenture, and the stock is now recovering a bit. But we've got Shrikant Chauhan now joining in on the last day of this trading week, the last trading day of this month as well, and that of the earnings season. Shrikant, and we're very much back in the range. The 23,800, 23,850 was seen as that upper end, the ceiling for a while now. Then we broke it this week. But once again, with the fall today, we're back in that end. How do you read the near term, medium term, and the trades?
Good afternoon, Rima. Good afternoon, Nigel and Prashant. I think the market is very clearly in the range. It is waiting for some outcome. And while looking at the macros, the way there is fall in the 10-year bond yield, as well as crude prices, which are quoting below the mark of 93, which is something positive that I can say, because sustaining below the mark of 95 itself gives some confidence that something is happening on the positive side. That's my view. Today, on the back of MSCI rebalancing, we are seeing some selling pressure in the market, but at the same time, 23,700, which acted as major support since last 3 days, today also acting as major support. So while looking at the setup of the market in the near term, we can see the market within the range of 23,700 and 24,000 on the higher side. On the dismissal of 24,000, we can expect some short covering in the market. And in case today market closes below 23,700, then we can expect some more weakness. But otherwise, broadly, I am of the view that the market is on the verge of moving towards the levels of 24,200 or 24,500 based on the overall activity in the market.
Okay, so headed to 24,200. What's the individual stock calls for the day or for next week?
If we consider the broader market, then there we are seeing a lot of opportunities where we are seeing consistent gains in mid and small size companies. For large cap stocks, very few stocks, they are participating whenever there is activity in the market. But we like NBFCs. There we are seeing good amount of buying strength whenever there is a recovery in the market. Bajaj Finance, which is currently around 935, 937, there we have a bullish view. We are of the view that it is heading for the levels of at least 1,050 in the near future, and downside is quite limited. So at current levels, it's a buy with a target of 1,000 on the higher side. We can keep a stop loss below 890 for the same. The other stock on which we are bullish is Shriram Finance. There also we are bullish, and there also we are expecting some 1100 sort of levels in the near future. Currently it is 950, and it has spent a lot of time within the range of 950 and 925. So in case if there is any correction, it's an opportunity to buy. But it is advisable to take some positional view. We also like TVS Motors from the auto space, and we are also focusing on few metal companies. If we have to consider the broader space of the market, then I think new age stocks, there we are seeing good amount of buying attraction, and stocks like Eternal, or maybe I can say even after a very long time, Swiggy has given some recovery sort of pattern, and delivery. I think these are the stock on which we can keep a focus.
Okay, all right. Got that. Thanks a lot for that, Shrikant. By the way, just keep an eye out on Asian Paints. Those numbers actually look quite good. The domestic volume growth came at a 12-quarter high. Looked rather good out there. I think it was close to around 12%. So that's the reason why we did see a bit of a spike. And in terms of the outlook as well, the external environment remains fluid, is what they're saying. West Asia conflict contributed to near-term uncertainty. However, supported by strong fundamentals and execution discipline, they remained resilient to navigate the near-term challenges. So that's why the stock initially saw a bit of a downtake, but otherwise, overall, the numbers look good. Solid volume growth, multi-quarter high. The street likes it on that front. Mayuresh Joshi is with us. Mayuresh, you want to come in on Asian Paints? Will it be painting the street green this year after a couple of years of disappointment?
Nigel, I think that's the hope, right? But yes, I think in terms of the domestic decorative volume growth, I think outstanding number at that. And again, I think the expectation in terms of volume and the value-led growth, obviously because of certain bits and pieces of the paint industry where competition intensity still persists, value growth might not keep on matching the volume growth, which is probably also what has happened in Q4 of Asian Paints numbers. However, in terms of what the management commentary might be, will be very, very interesting to watch out for. West Asian prices, supply chain issues, crude derivative prices, which means titanium dioxide prices moving significantly higher, which is a key input material for the paint industry as a whole, as well as the impending overhang in terms of the El Nino effect. I think if the El Nino effect plays out, it can have some element of a reverse impact in terms of demand as we head into Q2 and the second half itself. And then there can be some elements in terms of how the annualized numbers might probably look out. So Q4, outstanding set of numbers by Asian Paints. However, I think what the commentary might point out and all the factors which might act as headwinds might still persist in case of Asian Paints and the industry as well.
The conference call, I think, is today, 5 o'clock. So we will get more clarity on the way forward. Stay on, Mayuresh. Let's talk about NetWeb Technologies surging up 15%. Vinny joins in to tell us the news.
Hi, afternoon. So NetWeb Technologies again is buzzing in trade by one. We had the Maharashtra CM, Devendra Fadnavis, who actually is talking at the Mumbai Tech Week, which is going on. Now, key updates came in because the focus for Maharashtra, Mumbai, he's saying, is the AI story. He's saying the state is planning to establish 6 centers of excellence for AI in Mumbai. They have around 2,000 graphic processing units, the GPUs, that is, they're going to make available maybe to meet the rising demand that one has seen coming in. AI continues to be the focus for data as well as new technologies, and that's what the focus continues to be for Mumbai and Maharashtra in terms of data center as well. So they are looking to grow the data center base in Mumbai and Maharashtra. Now, apart from that, obviously, during the week, we had CRISIL that upgraded CRISIL that upgraded NetWeb Technologies long-term rating to CRISIL A+ stable versus previously CRISIL A stable was the rating for long-term rating. Short-term is maintained at that. Now, what was the reason they also gave? They said that the growth that one is seeing in the industry for AI, data centers, GPUs, NetWeb Technologies is well placed to capture that, right? Healthy order book as on FY26, the company had very good order book and strong order book, L1 orders of around 300 crores. This provides a revenue visibility for the company as well. Growing demand for HPC's cloud services, that continues as well. Government initiatives, like we've seen today specifically from Maharashtra government, but otherwise also the government is focusing a lot more in terms of the AI data point. And do not forget, and NetWeb Technologies has good relations, long-standing suppliers that they have, NVIDIA tie-up, they have Samsung, AMD, Intel. So that gives them an access to most of these, supplies and chips that they require much ahead of time in terms of technology also versus other players. So 9 to 12 months in advance is what they could get that benefit of as well versus other players. And that is why NetWeb continues to buzz every time you see any news coming in around AI, data center, and today also buzzing in trade.
Thank you very much for that. Mayuresh, is the market overlinking the connection between AI, data centers and NetWebs? Yes, there is a connection. But it's a 15% up move. How are you drawing the parallels between what's happening in AI and the benefit to NetWeb and where it's headed? Is it getting that scarcity premium here?
It is, Reem. Afternoon to you as well. And again, I think the expectations that are largely getting built in is the kind of humongous growth opportunities that exist over the next few quarters and next few years as far as this space is concerned. And therefore, as Vinny was pointing out, I think there is sufficient room for NetWeb to probably grow and expand its business quite meaningfully. And this remains one of the major growth drivers which can propel earnings to a significant extent. So yes, I think it is a beneficiary. To what extent it will translate in numbers, I think it is still going to take time on a substantial basis for numbers to come through. But I think the market is going with the momentum of the entire AI stock data center.
Yeah, 14%. Oh dear, that's a big move on NetWeb at this point in time. And as Vinny said, there's a bunch of things coming together for this one. 120 points lower. So, I mean, you know, we were, as we were starting, we saw that sharp recovery. It's not sort of translated into more since then. Any thoughts on BEML? Mayuresh? Results just came. Stock fell, I think, almost 7-8%, down 4 now.
No, I think the numbers were very soft compared on a year-on-year basis. And again, I think the expectation largely being built in is that with the entire infrastructure push that is happening, the expectations in terms of mining operations picking up steam, a part of its portfolio also caters to the defense part of the business. We are extremely bullish and optimistic in terms of select metal and mining names, Prashant. And therefore, I think BEML becomes a proxy to this entire trade. However, I think numbers were soft and not as per the expectations that one really desired. So I think it's up to the press release now or the management commentary to decode or decipher what really went wrong in the quarter.
Okay, BEML and BDL Bharat Dynamics both have disappointed in the quarter gone by. But let's talk about GMR Airports. It's set its eyes on an ambitious growth target on the back of the new brownfield airports coming up in Nagpur and Visakhapatnam. My colleague Vivek had a chat with the management. Vivek, what were your key takeaways from that conversation?
Well, you know, the biggest headline, of course, as far as GMR Airports is concerned, on the back of very favorable regulatory orders coming in as far as tariffs are concerned for the control, every 5-year control period. Number one is that you can now expect GMR Airports to be consistently profitable. FY26 marks the first year of profitability in over a decade. Now, as far as FY27 is concerned, the company is still grappling with various geopolitical headwinds, which has actually impacted passenger growth across all of airlines across the world. And GMR Airports, despite that, with the new airports coming into their fold from next month onwards, they're expecting passenger growth to trend in the range of 4 to 5%. They say that H1 passenger growth will be slightly softer compared to the kind of recovery that they're seeing as far as H2 is concerned. And they're saying that Vizag as well as Nagpur will start contributing to the financials for the 9 months of FY27. The bigger takeaway, of course, will be the fact that GMR Airports will now focus on 3 key business segments going forward. The aero business, of course, will be dependent on traffic growth and passenger growth, and that is something that they expect to remain quite steady. They call it the utility business. The second business, they call it the consumer-facing business, which is the non-aero part of the business. And remember, non-aero part of the business has scaled up significantly in FY26. It is almost equal to the revenue, EBITDA, and profitability of GMR Hyderabad, just to give some perspective to the kind of growth that it's seeing. But what the street will be really excited about come Q1 FY27, the management will give a detailed plan on how they plan to go ahead and monetize the very large land banks that they hold. Remember, they hold close to 1,200 acres of land in Hyderabad and close to 200 acres of land near the Delhi airport. So real estate monetization via development of these assets is something that the street will keep a close eye on. And also remember, there's another airport which the street expects could get some sort of value unlocking scene. So that also something that the street will keep an eye out on. GMR Airports, one of the top gainers today.
Okay, let's actually hear it from the management. Vivek, thanks very much for that. This is the GMR Airports management in that conversation earlier.
We are not too business-based. We are 3 business-based.
Okay.
One is the aero part, which is tariff-linked and gives a fixed, return on equity. And that's pretty much well understood. That's the utility part of our business.
Right.
The second, which now you can see the fruits of our strategy, is the non-aero part of it. Very interestingly, non-aero today as a platform both from revenue and EBITDA perspective, is bigger than Hyderabad Airport as a utility business.
Wow.
The third business, which till date has been more as land monetization.
Any thoughts here? Okay, I think you can catch the full conversation a little later on the channel. 4:30 p.m., by the way, is that when that we air that full conversation. Saurabh Chawla at the GMR Group. And you know, as he said, he kind of sort of explains the logic and what they're doing across the three lines of businesses at GMR. Mayuresh, any thoughts on this one? GMR Airports.
A very positive commentary from the management of GMR. And again, I think the expectations in terms of more airports coming their way can be a huge possibility. That's one. I think what the state is also probably looking at is the entire land monetization aspect. Because if they are able to successfully monetize a part of that entire fixed asset holding that they've probably got, I think it alleviates a lot of concerns in terms of balance sheet. And if the core business, as the management is pointing out, is looking at significant addition in terms of earnings delivery, I think you've got engine firing on all cylinders. So I think anybody holding should continue holding. I think I would be very much interested to hear the entire conversation at 4:30.
Okay, 4:30. Tune in, Mayuresh. It's an interesting one. Appreciate it very much as always. Thank you very much for joining us as well. Have a good weekend, Mayuresh. Always good speaking with you. We'll take a quick commercial break here. We'll come back and we will talk to Dinshaw Irani of Helios Mutual Fund. And he's Alpha Manager of the Day. Stay tuned.
Welcome back. Well, the Nifty is down close to around 130 points. But as I mentioned earlier, the India VIX is still pretty much well behaved. So that's good, you know, because the VIX is not really spiking up. It's up 4.5% or thereabouts. Last few days, the trend has been down. And even though we have pulled back from around the 24,100 by around 300 points or thereabouts, still we're not seeing the VIX spike up. So that's a bit of a positive. In terms of the options data, the PCR, that's holding below that 0.8 mark. So it's gradually moving towards the lower end because the call writers are having a blast. 24,000 call. Premiums come down to around, 91 rupees. That compares with around 130 rupees. 23,900 call as well. Premiums down to around 130 rupees from around 180 rupees. So clearly there is aggressive writing at these levels. However, on the flip side, the 23,800 put, there is a mix of activity out there. Earlier this morning, there were some signs of buying. But now the premium at around, 88 odd, there clearly seems to be some writing at that particular strike. And it's important that the Nifty doesn't break this band. It's trading around the 20 DMA. The 50 DMA is the next reference point on the downside. You don't want it to break on the downside. In terms of stocks that are in focus, Swiggy is the one that's come in for a bit of unbinding in today's trading session. So, that one comes up for you on the screen. GMR is seeing some fresh buying. And Wipro, there's a mix of some shorts covering out as well as, some buying being seen on that one. More than 60 lakh shares getting added in terms of open interest. So, net, though we are seeing a bit of a downtick, overall the structure still looks more positive than negative.
Okay, all right. That's the options data and what that suggests at this point. We have Dinshaw Irani with us. He's CEO, Helios Mutual Fund. Dinshaw, good to have you with us here. Thanks for joining in. I don't know if you saw, but our colleague Vivek had the GMR Airports management with us, and we just played a slice of that conversation a little earlier. I don't know if you own it or if you have any thoughts on it, or how do you, any way to think about this one as a business, Dinshaw?
So thank you, Prashant, for having me on your show, and a very good afternoon to you and your viewers. Yeah, we do own GMR Airports. We like the business given that India's domestic tourism, as well as aviation industry is still in a very nascent phase. So that's why we like that stock, and we've been holding on to it for a while now. And we continue to hold. Beyond that, I don't want to give any further bites on this one. Company specifics is normally avoid.
What's your read of the overall earnings season? We were just chatting with Amish Bofa, and he was telling us that while at the headline level you feel there have been a lot of beats, it's primarily driven on account of the commodity inflation pass-through. So in their analysis, 48 out of the Nifty 50 companies which have reported so far, there were many beats, but 45% of the beat was courtesy in commodities. And if you look at the NSE 200, it's about, I think 30% is on account of the commodity inflation. And generally, you won't give a higher PE on account of a beat linked to a pass-through. What is your own assessment of the earnings so far for your portfolio? What did well, what didn't do well?
So basically, if you look at NSE 500 also, that percentage will come down further. Anyway, the fact is that these compositions keep happening and so on and so forth. The point is that if you look at the quarterly numbers and break them up into market caps, and we do that on a daily basis, the numbers that we have is as of yesterday. And if you look at the way the market caps have, by the way, roughly around 95% of the market caps have given out the numbers. The large caps have grown at, I think, 11 or 12%. Low teens number is what the large cap growth is. The mid caps, however, have been the surprise part. There are commodity plays, but what we've done is we've tried to take away the companies which have turned from loss to profit, the likes of a Vodafone Idea and IndusInd Bank, which add a lot of beta to that difference. So that's why we've taken them off. Despite that, the growth there is around 26-27% in the mid-cap earnings. And the small caps have done their bit at 17-18% odd growth. Now, the fact is that when the war started, we were of the opinion that this overall, by the way, numbers are around 14-15% growth for the NSE 500. We felt that this will be closer to a low double-digit number, 10-11%. But it's come as a surprise to us. Commodities, I don't think has that much impact as the consumption names have had. Obviously, the big dampener were IT companies and so on and so forth. But the fact is that overall, the numbers are not looking that bad. Valuations, again, not that stretched. You've seen the rupee of the last few days. It's been doing fairly well. Government has been talking about doing certain things to control the fall in the rupee and to get the FIs back. I think things are looking pretty decent as what they were looking, say, a couple of weeks back. The conflict, if that gets sorted out, we'll see the market coming back on even keel. By the way, one has to tone down their expectations for the market growth also. Last year, probably if I told people that we're looking about mid-teens kind of growth, they would have been more than happy. I think this is what you're supposed to look at going forward. Those heady days of mid-20s and 30s kind of growth rates are over for us right now.
Hi, Dinshaw. Good to see you again. Dinshaw, the last time we were chatting, you were saying hopefully that we have crude coming down to $85, $90 per barrel, and your wish has been granted. If I'm not mistaken, first week of April is when we were chatting about this. And I think you were sticking to being overweight on BFSI while you were staying away from tech. You hold on to that stance?
Yeah, so we continue to hold on to that stance, Nigel. But what we've done within the BFSI is we are now reducing weights on the large caps a bit because we believe that that stability part is done and dusted now. You want to look at growth going forward. So you'll see quite a bit of changes happening when you see the portfolio for May. You'll see quite a few names being added to the mid-cap space and to the small-cap space. Certain new names coming up and stuff like that. Obviously, there'll be some chop-off happening on the large-cap space as such. And that's how we've been playing this. By the way, the call on crude was fairly simple at that point in time because what the Strait of Hormuz had affected was 14 million barrels a day, of which 5 additional million barrels were coming from US. They're from 4 million net exporter. They became a 9 million net exporter of barrels a day. And China, for obvious reasons, because demand collapsed out there, they've come down from 14 million consumption, rather 14.5, 15 million consumption to around 10 million. I mean, net imports to 10 million. So that was the whole reason that the offset was around 4-5 million barrels. And that could happen in a pretty short period of time if that strait opens up. And that's why normalization also could be sharp. That was the call there.
Okay, all right. Then, Shaw, I wanted to ask you about these EV plays. Ola is something that you all flirted with in the past, and it didn't work out according to plan at that point of time. And you all said, I think you all got out. But suddenly now the street is more and more interested about it, because on a month-on-month basis, after the low that it hit in terms of sales volume on a monthly basis in Jan, I think, or Feb, from there it's a gradual uptake. And my colleague Sudarshan was telling us that in fact the Vahan data suggesting that May will be even better. And if this trend continues, then maybe they'll move towards that profitability that they're talking about. Ambitious guidelines, they haven't gone according to it. But will you all be reinterested?
Nigel, I won't say yes or no to that one, but the fact is that when you said flirted with Ola, we had a love affair with Ather. I don't think you mentioned that one there, but that love affair has worked out perfectly well for us. And you've seen where
that's
Ather
a steady
is.
relationship.
We like the EV space. We like the two-wheeler EV space, but we're being very selective out here. So probably we'll take a call later.
Okay, no, this is Ather's the steady relationship. Y'all are rocking it on that front. This was, I said, flirt because you got in, out, and then, obviously that's the one with the technological advantage as well, as we know. And it's done very, very well. It's been actually poles apart between the two. But for the time being, at least telling us that you like that theme. What will make you all get positive, though, on this entire tech space? The debate out there, some calling for a bubble in AI. The street is totally divided. Every time you see the tech index come down, there is suddenly some good news. It pops out a little bit, then it corrects a little bit more. What will make you all turn this stance?
So basically, the fact is that once the pure poison is out of the system, in the sense that even now, the likes of Anthropic and OpenAI are now acquiring services companies because they want to keep the whole value chain with themselves. They don't even want to let that go out. So obviously they see a huge potential going forward for the products that they're offering. And that's why they're getting into that. And that for some unfortunate reason is being taken as a positive for Indian IT services. Guys, I don't think it is a positive right now. The fact is when this happens, when this whole thing chain plays out, we're talking about compression of margins. We're talking about lower growth rates. Already you've seen the growth rates are the guidance for Infosys 1 to 3%, which is being nowhere actually. I mean, no single digits. And unfortunately, if they do disappoint the market going forward, even the low Ps will not look low enough, because once you cut down the forward earnings growth, your Ps straight away start expanding. So we expect this to be a very painful transition. In the best case scenario, probably there will be a flat line in the IT space. Otherwise, we're not going to get in a rush out here.
Look at the market, which is cracked. The Nifty is down 300 points, and it's all, my God, it's dropped like a stone. Just pull up the Nifty if we can. And there you go. We were trading with a 100-point cut, which means that we were from 220 or to 230, 235. The market actually had recovered. All that is gone, and it's like a vertical slide, which we are looking at.
MSCI angle also, right? Remember the MSCI outflows were likely to take place from 3 to 330. So that explains that waterfall kind of decline.
Yeah, I mean, that's perhaps that explains it. But Dinshaw, you want to come in on that? These MSCI changes, FTSE changes, etc. There's usually pre-positioning, right? So not all that impact comes through in such a way in the last half hour.
So I just got a Nuvama note that I'm looking at. The India-related changes are estimated to result in $800 million to $1 billion of foreign passive outflows from India. That's the calculation according to Nuvama Alternate. So they're saying, and the calculation, and today is the day when that rejig takes place. The changes will be implemented from today. So.
I agree. The numbers are very large. But my question was whether this is. You heard the question, right, Dinshaw?
Yeah. So Prashant, the fact is that the active funds do this much earlier. Yes. But the passive ones, they do it on the last day. There's no way out for them. I mean, they do it when the changes actually are getting implemented. So maybe that is what the impact you're seeing. And by the way, while you were telling me this, I was checking on the tweets of the Portos. There's no fresh tweets from there. So that's not the reason why the market has collapsed. That much I can guarantee. So.
Mr. Trump is sleeping.
or he's watching CNBC. Watching you, Dinshaw. I think. Well, looks like it is MSCI and the passive active. Yeah, make sense that they have to wait and get the error rate down to tracking error down to the minimum, right? So you got to do it as close to the event as possible and not do it earlier. So 350 lower now. So this is going and going. So 23,550, 560 is where we are at right now. If we have those hot boards for Nigel, do you have that list of stocks where this is most?
Vivek's list.
Vivek has that.
I mean, I've got my own list, but I'm not sure.
If we have the list, if we can put the hot boards up, we should just look at the MSCI changes, the ones that Vivek put out. I think we'll get a sense of which stocks are seeing, and you know, I did technically it should show up in those individual stocks, etc. As well. Reliance is of course having the most index point cut. ICICI and HDFC, etc. Yeah.
There is in addition there's Federal Bank. In deletion there's Hyundai, Jubilant, RVNL, Kalyan. Yeah, this is deletion. Hyundai, Jubilant, RVNL, Kalyan. A little bit of a weight increase in Bharti, HDFC Bank. A weight reduction in Bajaj Finance, HUL and TCS. So Bajaj Finance, according to the note that I have, I think that's going to see an outflow of $250 million.
Anything in HDFC Bank, Rima?
Very slight increase is what I can see. Weight increase. In Bharti, HDFC Bank, ICICI Bank. So those are slight increases,
so
but the
Bajaj
one
Finance
you can see the decline. HUL is the other one, and TCS is the other one. TCS could see about $180 million of estimated outflows.
Okay.
Okay, and on the small cap end, addition is that's the list, right? Yeah, that's the list. IRDAI is going to see increase. Escorts, addition, Anthem, addition. Deletion is Federal Bank, and there is a decrease in weightage in Uno Minda, M&M Financial Services. Some of those hot boards also simultaneously. We should get that up, but you can clearly see that playing out. And net, we're looking at an outflow almost of nearly $1 billion, so fairly sizable.
Yeah, there's a lot of stocks on the positive side and negative, but still
negative side. But net, we're looking at an outflow of a large number, $1 billion.
Uno is there as well, right?
Uno is there as well, which is going to see a weight reduction.
Okay.
Along with Glenmark Pharma.
That I think that explains it, except maybe an HDFC Bank where there is a weight up, but HDFC Bank is slumped 2%. Everything else, it's kind of sort of tallies up. Yeah, there you go. HDFC Bank is sold off 2%, whereas there is, I think, a bit of an increase from what we have.
And on the MSCI Small Cap Index, the number of deletions will be to the tune, I think, of from 474, it will come down to around 459. So there'll be some deletions as well.
Okay.
Like to see over a dozen deletions.
So about 14, 15 odd
15.
deletions from the small cap. Let's just actually have the small cap index as well. Take a quick look at it. And then we can sort of go back to Dinshaw. There you go. It's down about 1%, and suddenly very, very quickly coming through at at this point. Dinshaw, the other, I mean, it's not so much about MSCI but do you guys? I'm sure this is a discussion topic, because I know there's a discussion topic across many funds and all kinds of market participants about the impact of these large high-frequency trading firms, the big ones. Many are still active here, and the outsized impact they still have, especially on expiry days. Dinshaw, any thoughts there?
Not really, Prashant, but you can see it very clearly that closer to expiry, excuse me, it's always been a very choppy and volatile market, which never used to happen earlier. I'm sure these HFTs are the ones which are creating this, but frankly, I mean, there's no, we internally also, we're not even discussing this right now. So
I see. I've got that. So 390 now, so almost getting to the 400-point cut mark on the index. 23,516 is where we're at. We still have, 20 minutes to go for market closing to come through. Dinshaw, we'll leave it there. Thank you very much for joining us. Have a good weekend, and we'll speak again. Appreciate your time here on CNBC. 1% lower on the Nifty Bank, and I mean about a 1% cut on the Nifty as well. Take a break. We're back on the other side. More coming up.
We are not two business based. We are three business based. One is the aero part, which is tariff linked and gives a fixed, return on equity. And that's pretty much well understood. That's the utility part of our business. The second, which now you can see the fruits of our strategy, is the non-aero part of it. Very interestingly, non-aero today as a platform, both from revenue and EBITDA perspective, is bigger than Hyderabad Airport as a utility business. The third business, which till date has been more as land monetization.
Welcome back. Well, the sharp drop that we are seeing is because of a rejig with regard to the MSCI. And if that's the sole reason and the structure doesn't get broken, you could see a rather swift, some part of this drop after this 380 points odd could actually get reversed either in the last few minutes of today or on Monday morning as well. So just keep that in mind for the time being. If it's only because of the MSCI outflows and passive outflows, then you could see a bit of a pullback as well from this 380 points odd. Let's talk about stocks in the broader markets. MCX had a beautiful run. However, today the stock is under pressure. There's a bearish call coming in from UBS. Divyani joins us to help us out with those details. Divyani?
UBS has come out with a note on MCX and has downgraded the stock to a neutral with the target price raised to 3,600 rupees per share from the earlier 3,200 rupees per share. Now, UBS says that the peak earnings momentum is likely behind with elevated volatility seen across key commodities in recent months. Now, while the Q1 FY26 volumes till date have been healthy, they still say that they have normalized since Q4 levels. Now, from a competition standpoint, they say that they're not currently worried about the competition as yet, while taking note of the fact that the stock is currently trading at 50 times its one-year forward price to earnings, which is 10% higher than the historical average that the stock has traded at till today. Now, they believe that the strong volume run rate is already priced in and there is limited upside from current levels. So the stock is clearly taking a beating for it.
Okay, all right, Divyani, thanks a lot for that. Sudeep Bandyopadhyay, market expert, joins us on the show. Hi, Sudeep. What's your take on MCX? A big outperformer. The average turnover has been moving up on a month-to-month basis, but it got a little bit too expensive. What's your view on the stock?
Well, Nigel, we have been positive on MCX for quite some time, and we maintain our positive view. I think a lot of things are happening which are good for MCX. Of course, I mean, they are the absolute leaders. There's no competition worth talking about. Commodity is absolutely, hot, red hot. A lot of action is there in all commodities, whether it's soft or hard. MCX benefits out of that. New contracts, including options, are getting launched. Hopefully, more and more will get launched in the coming few months. An NSE listing, which is on the cards, will create further excitement in the entire exchange space. So this is not the time to exit MCX. This is the time to remain invested or even get into MCX. 1 year forward earning based on historical data, I think will not give the right answer. MCX definitely is a hold or a buy.
Among the three exchanges, MCX and BSE, one-way move out there. You have the unlisted NSE also. Your pecking order among the three, if you're allocating fresh money?
MCX, BSE, and of course, NSE as and when lists, we'll have to see what price they come up with and what the excitement is around listing.
Got it. Okay. All right. Got that. Sudeep, I want to ask you about a couple of other names then. Any view on stocks like Rain Industries? The stock has burst up. If you have a view, or even Bharat Coking Coal, stock listed, I think, at around 45 rupees, then it corrected to around 33 rupees, and now it's pulled back up to around 40 rupees. If you have a view on either of these two, Rain Industries or BCCL.
Rain, of course, because what's happening in the metal space, aluminium in particular, I think Rain is definitely going to have a good time, and no doubt the performance has been improving. We are positive on Rain, and the company has been pretty efficiently managing its operations, and I think the upswing in the industry, particularly the aluminium industry, is going to continue to benefit Rain in the foreseeable future.
Yeah, got that. So that is the view. Well, 360 odd points lower is what you have at this point in time. And I mean, a bit of a recovery from the absolute day's lowest level, but not very much beyond that. 2:1 is the declines to advances ratio. So things have sort of, turned on the other side in a pretty dramatic kind of a way coming through. Sudeep, we had Amish Shah of Bank of America this morning. Their conference kicks off on Monday. And it's not the first time we've heard it. But his view was that there's going to be a lot of focus on developing shipbuilding as a big industry in the country, and it's a very long gestation sector, capex heavy, all of that, of course. But he thinks first of all, he thinks there are limited names, and that list will expand as we go along, as the sector develops. But even within the listed space now, the 4 or 5 names that we have. There is still opportunity. Do you like anything there?
Oh, well, I definitely like, and I think he's absolutely right. Look at the global, shipbuilding industry. China is completely at a different level altogether. Korea, the entire capacity is booked for, I think, 30, 40 years. US is a serious capacity constraint. So the opportunity for India to develop shipbuilding industry is humongous. And I think Andhra Pradesh is going to get a large shipyard project approved very soon. Of course, amongst the listed 3 companies, we can talk about Cochin, Mazgaon, and Garden Reach. I think all 3 have got fantastic prospects. There are challenges in terms of valuation at which they trade, and there are challenges on execution. But the question of future, the question of receiving orders, I think is absolutely clear. They have a great future, and they will continue to receive orders by dozens. So there is no doubt. Now, if I have to pick one of the 3, I think I'll still go for Mazgaon Dock. But my request is somebody buying the stock, please think long term. This is an industry where long term pays, and you also should enter the industry thinking long term.
Got that. Stay with us, and that's well put there. Auto numbers, right, will be with us when we come back on Monday morning. So let's get a quick preview going. What will May auto sales look like? Sudarshan gets us that preview. So over to you.
So as the Vahan data has been indicating, that even for the month of May, we are expecting a strong set of numbers despite the price increase that most of the companies have announced in the month of April or in the early part of May. So if you talk about the industry for passenger vehicle wholesales, we are expecting an increase of 24%. Even waiting periods as per Nomura have normalized for passenger vehicle segment. For two-wheeler industry, growth can be up to 10%. For MNSCB, it can be up to 9%. And as far as tractor segment is concerned, it can underperform the industry, I would say the peers, and there can growth be of 4%. And also, as far as the tractor segment is concerned, we'll have to see the monsoon update, because today only Met Department has come out with the update and it believes that monsoon can be below normal. Now talking about the company wise, in the two-wheeler segment, Bajaj Auto growth can outperform the peers, and there the growth can be up to 24%, followed by Hero Moto where growth can be 11%. TVS can again outperform Royal Enfield, and here growth can be 16%. And for Royal Enfield, because of the production loss that company had talked about in the analyst call, their growth can be up to 12%. In the four-wheeler segment, Maruti can continue to report the healthy growth, and it can be 24%. Tata Motors PV will continue to outperform the industry, and growth can be as high as 39%. M&M Auto growth can be 15%, and Hyundai will underperform, and here growth can be 9%. In the commercial vehicle segment, both Tata Motors CV and Ashok Leyland are expected to see healthy growth, while Ashok Leyland will underperform Tata Motors CV. For Tata Motors, growth can be 24%, and Ashok Leyland growth can be 8%. In the tractor segment, one company that we are tracking, that is Mahindra & Mahindra Tractor, and growth can be 7%. So, despite the price increase that I have talked about, we are expecting a healthy set of numbers, and especially in two-wheeler segment and in the passenger vehicle segment.
So, you have to choose one number, so what would that be?
Tata Motors passenger vehicle. And mainly because of the push that we are getting from government and the regulatory bodies regarding the electric vehicle.
I see. It's already been like a good performer, right, lately?
Good performer. And if you talk about the stock also, it has outperformed the peers in the last month, or say even in the last 2 months. And after the earnings, the stock has jumped as high as 25%.
You remember even Shailesh Chandra, we had some snippets of him and he was talking about very, very strong growth coming in on Tata Motors passenger vehicle, particularly on the EV front. Demand has just exploded. So that's clearly the number to watch according to our own Sudarshan.
Yeah. Well, so thank you very much for that. So that is, the May auto numbers as we will get them. And stocks, of course, will react to all of this on Monday. Amish Shah of Bank of America with thoughts as the BofA annual investor conference kicks off. We had him earlier today. So, I mean, his assessment of on earnings, he's not very impressed. Sector bets, he spoke a great deal about that. And, of course, he thinks logically taxation on equities should be lower. Listen and take that break. See you on the other side.
Has taxation lopsided allocations of retail savings towards equities? Completely yes. Has the capital gains discouraged foreign investors, especially when rupee is hurting, especially when earnings growth is low, valuations for India are high? So therefore, is India out of my radar as a foreign investor? The answer is yes. And given that large part of the rupee problem right now is also lack of capital flows, I think it makes sense for us to do it. So the answer that I'm trying to give is that, logically, if you think about it, we must do it. The likes of data centers, shipbuilding, defense, cables, transformers, so that as an ecosystem or any company linked to that ecosystem will do very well. But in general, anything that was linked to state government capex, state governments, as we know, have gone more populist and at the cost of capex, therefore. So, so state government capex is primarily in water, irrigation.
Very, very sharp sell-off. We're now staring at 23,500 on the Nifty. 400 points gone. Sensex lower by 1,200 points. Sudeep, pretty much out of time. We've got 2 minutes to go before we wrap the trading day and the week. Do you want to quickly share one or two ideas?
I do like LIC. I think it looks pretty good. Numbers were pretty good. Really.
Okay, we'll try and reconnect with you, but LIC is a stock that he likes. I think there's some adjustment which must have taken place
LIC,
in
yeah,
LIC. There's an adjustment. There is a bonus of 1:1, which explains that 50% drop in price. But for the markets, it's an MSCI-led sell-off which took place in the last 30 minutes. There was a waterfall decline. But even if you look at the chart on an intraday basis, we opened higher, we opened flat, but with a positive bias. 2,400 was nearly the intraday high on the Nifty, and from there we were gravitating lower before that vertical fall which took place, ending with a cut of about 1,000 points on the Sensex. Now it's trying to pull back a bit, and the Nifty around the 23,550 mark. Sectorally, I think IT was the only sector where we managed a little bit of some gains coming through. So Tech Mahindra, HCL Tech, Wipro in the green, ending with gains of about 1.5%. Asian Paints saw buying post their numbers, a good set of numbers. Street likes the performance, and generally the numbers from many of these paint companies have been quite strong. Nestle trend, so there was a consumption tilt on the buying side too. On the way down, the top loser is Power Grid, so that slipped below the 200-day moving average today. Bajaj Auto, Eicher Motors saw selling. The May auto sales numbers will be out over the weekend and early next week. Interglobe Aviation under pressure ahead of numbers. Q4 is going to be weak on account of the March geopolitical stress, and even Q1. So the street will watch the outlook very closely. NTPC, Max Healthcare. Max has been a big drag this entire week. So today 2.5% down, but it's lost nearly 5.5% from the top of the week. And ONGC, with the slide in crude prices to $92 per barrel, ONGC slipped 3% today, and for the week it's down 8.5%. So that was the biggest casualty of the week.
Well, I think that is the week, right? I mean, Nifty down 0.9, Bank Nifty up a little bit, mid-cap index up a little bit, small-cap index up about almost 1%. So the best performing part is the small-cap index. Once again, it's a wrap on this edition of Closing Bell. Thank you very much for staying with us. More comes up on the other side.